Oh, hello. I'm going to talk about ABC trading pattern that often market produces. ABC trading pattern is very reliable and highly rewarding. Let's get into this. Market produces two types of ABC pattern. One is bullish and another one is bearish ABC trading pattern. Let's have a look. Okay. This is the bullish ABC trading pattern. Price starts going up from point A, goes up to point B, comes back to make some correction up to point C, and then it goes up. Have a look here again. Price starts going up from here to here, comes back, and then goes up. And what we're going to aim at, we're going to trade on these arm. On bearish ABC pattern, price starts going down from point A to point B, goes up, and then it comes down again. Alright. Okay, here I have an example of bullish ABC pattern, and if you have a look here, the price made a hair high here, comes back to point A, then goes up to point B. Obviously, before going to point B, it has made a break here. This is the breaking level. Price comes back to point C, and then it goes up. The question is, where does our C lie? Yes, point C lies exactly where the previous swing higher high was. See, I have drawn a horizontal line here, okay, and point C lies exactly on these horizontal line. So this is what we have to make sure. We have to know where our C point is and where we should take our entry from, because to trade on ABC trading pattern, this is the most important thing. Now the question is where we take our entry and stop loss and take profit. Let's have a look into our next slide. Okay, this is a bullish ABC pattern, and if we have a look, the price has started going up from here, has gone up to point B, comes back to point C, and then goes up again. What we do here is we have to wait for the price to come back at C point, as I said earlier, and then produces a reversal candle like a doji candle, a pin bar, or an engulfing candle. I mean, if we follow 1 hourly chart, then the market has to produce an hourly doji candle or a pin bar or an engulfing candle. Then we take our entry. Suppose here we set our stop loss at this level, and then we go up to point D. Now we know where our point C lies. We know our entry as well, because after producing a reversal candle, all right, like an engulfing one, a pin bar, or a doji one, okay, and we take our entry. If it is an engulfing candle, we take our entry just after that engulfing candle. If it is a doji or a pin bar, then we flip over to a smaller time frame, such as if we follow 1 hourly chart, then after producing an hourly doji or a pin bar, we wait for a 15 minutes candle to go up. All right, then we take our entry. So more likely we're going to take our entry at this level. Okay, then we go up to point D. But the question is, we don't know where our point D lies, right? Yes, it is actually not that tough to find out. What it is, you have to just measure the length of this arm, all right, and CD arm should be very similar to this arm as well. I mean, if you have 50 pips here, you just count 50 pips from here to point D. So this is it, and it gives you a risk and reward ratio of 1 is to 3 in most cases. So this is pretty much it about setting our stop loss, taking our entry, and taking and putting our take profit. Okay, it might sound bit complicated at the moment, but I tell you what, once you have done some practice, it will get easy, and you'll get the basic and the main idea of it, and you'll be able to make a load of green pips. As I said, to trade on ABC pattern, break is important. So when we see a break, we should just say wow, break, right? Now we should ask two questions as well, like, is it going to be an ABC pattern, and shall I wait for the C point to take entries? Because not every break produces a valid ABC trading pattern, so we have to be a bit careful, because at the beginning I used to get trapped by this, so and I do not want you to be trapped. So you really have to know a valid ABC trading pattern or a valid break. Let's get into this. Okay, we have a break here, right? As you can see, we have a break here. Price goes up to this level, and obviously if it was a valid trading pattern ABC, then we should wait for the price to come back at this level to take our entry, right? But over here, this is not going to be a valid ABC trading pattern. The reason why uh, I say this, because if you see the length of this arm from here to here, right, from here to here, is like almost three times of this arm. This means if price does come back from this level to this level, it is going to produce another trend as well, and it's going to be two-thirds of this total arm, and it means the trend of strength of this trend is going to be demolished a bit, so price might not react, or price might not go towards north as it should do, like with a valid ABC pattern the price does, or price goes up. I mean, when it happens, when we do not get a valid ABC trading pattern, or we do not get a valid break to produce an ABC trading pattern, we should know how do they end up at the end, or is it worth taking entries on this kind of pattern. In my opinion, it is not actually worth taking entries on this kind of pattern, because they end up like this. When we have an invalid break, all right, and this arm is like uh, too large if we compare to this arm, then price starts being in range, goes up, comes down, goes up, comes down, and most probably it's going to hit you stop loss. You are just going to take some loss instead of making profit. So there is no point of taking entries in this kind of invalid break, and we know the difference between a valid break and invalid break. With a valid break, what we have to do, we have to look that the break happens right at the middle of this arm, or bit less. I mean, if this arm is longer than this arm, it's fine, or even 50%, 50% is fine as well. But if it is like too long, this one, than this one, then it is not a valid break, or it is a break, of course, but it is not going to produce an ABC trading pattern. We really have to be very careful at it. Okay, now I'm going to give you the golden rule to be mastered ABC trading pattern. Okay, the golden rule to be a master at ABC pattern is very easy. So you don't really need to think about valid break or invalid break, or length of arm, or this kind of tricky thing. All right, I'm going to give it in a minute, so please fasten your seatbelt and concentrate. Here you go. Yes, the golden rule is practice, practice, and practice. So, guys, please do a lot of practice, do some back testing, and practice on your demo account. And once you are very confident, once you know exactly the basic of it, exactly how it works, when it works and when it doesn't, then you should be able to trade on your live account as well. And trust me, this is very very reliable, very rewarding. So once you be master at it, you will be able to make a lot of green pips. You are most welcome to ask any question if you have any. Thank you very much. I see you in next videos.